Within the complex world of personal finance, using debt is like playing a well-tuned instrument. It's a complex symphony, with every note carrying the possibility of financial harmony or discord. How the rich are using debt to generate wealth dissects the complex strategies that set successful wealth creators apart from the general public. Have you ever wondered how the wealthy manage to use debt so successfully to further their financial position? Join us as we go on an enlightening trip to understand this intricate relationship and learn more about the various tactics that turn debt into a potent engine for wealth generation. Understanding the nuances good versus bad debt. To properly traverse the debt environment, one must first distinguish between good and bad debt. Bad debt frequently entails the acquisition of depreciating assets, which leaves the borrower with fixed payments and diminishing value. On the other hand, prudent use of borrowed money for investments that increase in value over time or produce positive cash flow is known as good debt. Senior Vice President David Mook emphasizes the significance of evaluating risk and cost in order to effectively differentiate between the two. It's becoming clear that this crucial knowledge is essential for making strategic financial decisions as we work to solve the enigma of debt. Making the distinction between good and bad debt sets the stage for using debt as a strategic tool in the quest of financial prosperity, rather than just as a financial tool. Strategic methods: how debt catalyzes wealth. Now let's take a closer look at 5 smart ways to turn debt into a wealth-generating machine. 1. Real estate leverage. One of the best markets for debt leverage is real estate. Imagine that a shrewd investor purchases a $200,000 house with a 5% down payment of $10,000 and a $2,000 monthly mortgage. With a 20% appreciation to $240,000, the $10,000 down payment generates a whopping 300% return on investment. Additionally, debt can be used strategically to purchase homes meant for Airbnb or rental income, increasing cash flow and overall earnings. The real estate market, when navigated with astuteness, demonstrates how debt can be wielded not just as a financing mechanism, but as a powerful multiplier of returns. 2. Leveraged buyout, LBO. LBOs are an advanced tactic in which a buyer pledges a sizable quantity of debt in exchange for the target company's assets. By using this strategy, the buyer can acquire the bulk of the business with the intention of using future cash flow to pay off debt. This approach is a good example of how debt can help with strategic purchases of successful companies. When we dig deeper into the realm of corporate finance, the leveraged buyout proves that debt can be strategically used to acquire ownership and management of successful businesses. 3. Short selling. The fascinating realm of short selling reveals a tactic used by investors to take advantage of falling stock prices, using debt as leverage. Through the practice of borrowing shares, selling them at a profit, and then buying them back at a loss, investors demonstrate how debt may be used as a tactical tool to navigate bear market situations. In addition to enabling investors to profit from market downturns, short selling demonstrates the adaptability of debt as a financial instrument that may produce profits in atypical market conditions. 4. Margin account. Although margin accounts provide the benefit of allowing investors to borrow money or shares to increase trade size and possible returns, they are not without risk. This tactic highlights the dual nature of debt as both an amplifier and a potential hazard, adding a layer of complexity to the fine balance between profit and possible loss. When examined in depth, the margin account provides an excellent example of risk management and the cautious maneuvering needed when using debt to increase returns. 5. Debt for living expenses. Smart investors, particularly those with high net worth, purposefully use debt to pay for living expenditures. This strategy, which shows how debt may be deliberately used to delay financial commitments, enables them to delay capital gains taxes by using lines of credit secured by their holdings. Using debt for living expenses is an example of the strategic use of borrowed funds to maximize tax consequences and improve overall financial flexibility, even beyond the domains of trading and investing. Strategic debt extends beyond transactions, achieving objectives. Strategic debt becomes a flexible instrument for accomplishing goals rather than being limited to financial transactions. Student loans and mortgages. Since they are linked to greater earnings over the course of a career, student loans are an example of good debt. Mortgages, on the other hand, enable people to become homeowners, accumulate equity, and maybe benefit from tax advantages. Examining the domains of education and property, these examples show how debt can be used to achieve strategic life goals and long-term financial rewards. Leveraged investing. Using debt to magnify gains through leveraged investing increases the total size of assets and may increase returns. This tactic demonstrates how debt can be used to enhance investment portfolio performance. When one delves into the complexities of investment management, leveraged investing can be used as a tactical instrument to improve portfolio performance and accomplish financial objectives. Diversifying portfolios. Rich people frequently use loans as a means of diversifying concentrated stock holdings, which results in a long-term investing plan that is more resilient and balanced. In addition to reducing risk, this strategy postpones paying capital gains taxes associated with selling concentrated stock. The technique of using debt to diversify portfolios teaches investors how to avoid taking on unnecessary risk and how to manage their money in volatile markets. Mitigating risks and assessing tolerance. Effectively navigating the world of strategic debt necessitates a sophisticated awareness of one's risk tolerance. Mook advises aligning debt repayment plans with payback time horizons and individual tolerance for market volatility. A pertinent example he provides involves using a loan to pay a tax bill, strategically avoiding disruptions to an investment portfolio. This exemplifies the nuanced skill of strategically utilizing debt to prevent unnecessary financial disruptions and highlights its efficacy in specific scenarios. As we explore the intricacies of risk management, it becomes evident that strategic debt isn't a one-size-fits-all solution. It requires a personalized approach tailored to individual financial goals and risk appetites. Debt as a strategic ally, crafting financial futures. Rather than being a one-size-fits-all answer, debt may become a powerful advantage when handled strategically. Rich people have perfected the skill of using debt, whether via carefully considered loans, leveraged buyouts, short sales, or real estate investments, to control their financial destiny. Applying these strategies to one's particular financial circumstances requires careful analysis, risk assessment, and, possibly most importantly, seeking advice from financial professionals. Let's consider debt as a strategic ally in our pursuit for financial prosperity, rather than just as a tool for navigating the tricky world of personal finance. With wise debt management, you too can mold your financial future, just as the wealthy have done for years. When managed carefully, debt can become a significant advantage rather than a one-size-fits-all solution. Wealthy individuals have become experts at leveraging debt to steer their financial course, whether through well-thought-out loans, leveraged buyouts, short sales, or real estate investments. Applying these tactics to one's unique financial situation necessitates thorough examination, risk evaluation, and, perhaps most importantly, seeking guidance from financial experts. Rather than viewing debt as merely a tool for negotiating the complex world of personal finance, let's view it as a strategic ally in our quest for financial prosperity. Like the wealthy have done for years, you too can shape your financial destiny with prudent debt management. For real-time updates, don't forget to ring the notification bell so you never miss out on valuable insights that could shape your financial future. Join our community of savvy investors, and let's continue this journey together towards financial mastery. Thank you for being part of our community, and we look forward to having you back on our channel for more in-depth discussions and actionable tips. Until next time, happy investing.